Retirement taxes too high? Try these 5 smart ways to reduce tax liability in retirement. Smart Asset. If you're approaching retirement age, you have a lot to think about. Focusing on limiting your tax liability can be especially valuable. After all, the more taxes you pay in retirement, the less money you'll have to live off. Continue reading Right-Pointing Arrow. The post 5 ways to reduce tax liability in retirement appeared first on Smartass T-blog. Below are your comments. Property taxes need to be considered too. I know several retired folks who have paid off their mortgage years ago but were forced to sell an MOV because the property taxes had increased to the point where they were more expensive than the original mortgage payments. Article missed some low-hanging fruit. Pay off your credit cards before retiring, if you can. You don't want a part of your fixed income going to credit debt you incurred years earlier at a 20+% interest rate. Here's a better idea. Write your senator or congressperson and tell them to index taxes for inflation. The taxable Social Security rates were set 40 years ago. Quit taxing seniors' Social Security payments, or at least index them, and stop taxing married seniors at a higher rate. It's not the 19. Instead of focusing on taxes so much, focus on making money. You know that share of co-stock Warren Buffett bought back in 1988? Think about how hard that share is working for him now. He's probably not too concerned with the tax consequences. I reduce my taxes by buying fixed annuities, which permit the deferral of taxes indefinitely. I also buy brokered federal government bonds with low coupon rates at a discount to par, which, held to maturity, defer fit, and are state and local, tax-free. Next news. Market Mind. Waiting for word from the Fed chief. Reuters. Markets are largely in a holding pattern, with investors looking to 2 days of commentary from Fed Chair Jay Powell starting later in the day for a steer on whether U.S. rate hikes are indeed done. Last week's surprisingly soft jobs data heightened expectations that interest rates had peaked, but Fed commentary since then has warned against complacency in the fight against inflation. For now, investors have dialed up wagers on near-term rate cuts, with the Fed funds rate showing better than 50-50 odds for one as early as May. The dollar's prospects have also softened in line with the more sanguine outlook on rates. Below are your comments. Biden inflation is still out of control. Expect 2 more rate hikes in 2024. A Trump presidency will result in a solid market and growing economy. The stock market is looking for rate cuts to get back their cheap money. Isn't that special? Those days are over. We are still far from 2% inflation rate. No cuts in 2024 will not be what they want, no matter how much pressure they put on the Fed. Rate hikes are not a major concern. Rate drops are what is going to keep our country going forward. Powell and the Fed Reserve hold investors hostage. We need to get rid of both and let the market work on its own. It does very well that way. Rates are not going higher and will be lower. Massive stock rally next year. Next news. Stock market news today. Stocks tread water with Fed's Powell on deck. Yahoo Finance. Investors are on high alert for Chair Jerome Powell's comments after several hawkish Fed speakers put a check on spirits. Below are your comments. The next 6 months will be rough with $1.5 trillion of debt to be rolled over with very few foreign buyers to be had. This also will put pressure on the stock market with less inflows holding interest rates higher. This will be interesting to see how inflation reacts as the Fed will have to print. Firms, brokers, buyers, etc. have been using any excuse since the first raise by the Fed to say that they will be cutting soon. It just shows how upside down the investment world is when fundamentals don't mean anything anymore. If they did, this market would be 25% lower. Just look at the Schiller. But Powell just talked last week. Why should investors on high alert wait for Powell's talk to assess as if he is gonna suddenly reveal new information even though only less than 1 week passed? I have a dream that the Fed does not talk anymore. What about playing with their great-grandchildren or sitting on a golf cart? The Fed needs to raise rates at least more time this year. There is nothing indicating that high prices won't persist or continue to go up. One more is appropriate. Next news. Bill Ackman pocketed over $200 million from his bond portfolio. Here are some of his other popular investments. Benzinga. Bill Ackman, the founder and CEO of Pershing Square Capital Management, is a renowned billionaire institutional investor and hedge fund manager with a net worth of over $3.5 billion. The Harvard University-educated finance executive is known for his leveraged contrarian bets on the stock and bond market. In 2020, just days before the U.S. announced a total lockdown, Ackman hedged his investments, predicting a complete shutdown of the economy through credit default swaps, netting a profit of over. Below are your comments. Did the $200 mil cover his Netflix losses? That's a good form. Bill Ackman, big bank like him, the market tries theirs best and Bill makes money. Bond and 10 years sell-off suggest to stop it for these market participation and await a constant. It's not a crash and a fall, that was a good not bad as you know. Is $200 millions a lot? Don't be fooled. Political right is crucially important at Wall Street. Look at the countries of world dumping long-term bonds because skyrocketing amount of American debt and deficit and interests pay off. Personally, I find Ackman's business tactics as revolting. Why the hoopla? PSH has underperformed the S&P 500 YTD. Next news. Goldman Sachs says utilities and consumer staples stocks are set to outperform as the presidential election approaches. Here are two names the banking giant likes. Tip ranks. Almost exactly a year from now, Americans will cast their ballots and vote for a president, doing so for the 60th time since 1788. The election process will kick off in earnest on January 15 when the Iowa Republican caucuses mark the official commencement of primary season. Right on time, says Goldman Sachs chief U.S. equity strategist David Kostin. Investors have started asking how the 2024 election will impact the stock market. Going by the history books, it's not going to be a vintage year. Below are your comments. Just buy a consumer staples ETF and hold long-term. There are so many choices with individual stocks, it is going to be difficult to pick and outperform. At the same time, even now, a consumer staples ETF has a PE above 20. So they could still come down quite a bit. Plenty of CS stocks are still. The stock market will be propped up somehow for the election. No matter who wins, it will be the most epic crash in history after that. Consumer discretionary, VCR, has done better long-term compared to consumer staples. VDC. A suppose and a number exactly. After the coming crash. Next news. Are I bonds a good investment now? Here's what to know. CBS Money Watch. The interest rate on Series 1 savings bonds now tops 5%, although as investments they're not right for everyone. Below are your comments. I bought I bonds when they were paying 9.6% from Treasury Direct and have held them for a year now. There is a limit on how much you can invest. I will be selling them soon and buying 3-month treasuries from Schwab. The current interest rate is about the same. The process is much less complicated and the interest lost is only the last 3 months if cashed out before the 5-year mark. The best part is leaving the I bonds in there with no interest income reported until you redeem them. And they build up with a married couple each adding more I bonds each calendar year to the max contribution limit. The 5.7% rate is with the fixed rate included, but the bonds bought back in 2021 there isn't any fixed rate. They neglect to tell you this as that rate now is much lower if you buy them at find this out why. Oh, you can't sell them until you have them for a year, then you can sell at forfeit the unless those who own I bonds plan to keep them for 5 years. The time to exit is now when you only have to give up 3 months interest at 4.35%. Next news. Australia farmers are giving sheep away for free after 75% price plunge. Bloomberg. Australia's sheep industry is in crisis, with prices near the lowest level in 16 years, forcing farmers in the country's west to give their animals away for free to pet food manufacturers. Read from Bloomberg. Rockstar plans to announce much anticipated Grand Theft Auto V Trump's Wealth has jumped $500 million since he left the White House to meet U.S. business leaders for dinner in San Francisco. Apple delays work on next year's iPhone, Mac software to fix bugs. WeWork goes below are your comments. Farming is a hard job with few good years but much joy in pulling your own weight and freedom. No CIT. Why can offer for free? Oh come on, you can't pull the wool over my eyes. Judging by what I am being for lamb these days, somebody is making money. Geez, the last time I bought a couple of pounds of lamb chops I think I paid nearly $60 and I could buy 3 whole sheep. Though my wife would get too attached and it would end up costing me $1,000 or $2,000 a year to keep them alive as pets. This world is jacked up. So much need, yet turn them into rack of lamb and lamb chops. Next news. WeWork saga cost Masayoshi Son $11.5 billion and his credibility. Bloomberg. WeWork Inc.'s bankruptcy filing caps a years-long saga that revealed breathtaking flaws in the investment style of Japanese billionaire Masayoshi Son, damaging his professional reputation far beyond the money he lost. Most read from Bloomberg. Rockstar plans to announce much-anticipated Grand Theft Auto V. Trump's wealth has jumped $500 million since he left the White House to meet U.S. business leaders for dinner in San Francisco. Apple delays work on next year's iPhone, Mac software. Below are your comments. SoftBank's success in buying startups was a product of the misallocations money sees when interest attach or keep at zero for too long. Guys like this, Elon included, had one good idea, get tons of adulation for it and think they can do it again. Most of the time they are wrong. But we treat these people like gods. Mistakes like WeWork happen because of hubris. We scam. WeWork was a failed idea from the start. The fact that Newman walked away with billions is a total joke. They say a fool and his money is easily parted. Next news. Nvidia isn't the only way to play AI. Watch this stock, too. Barron's.com. Artificial intelligence remains the key theme in tech reports. These are 2 of the best plays, according to analysts at Melius Research. Below are your comments. Just read through the article. Interesting take on AI stocks, but if you're really looking to accelerate your financial goals, it's pivotal to have expert guidance. I've been mirroring trades with a pro rather than handing over my cash, and the results have been nothing short of a positive dream. AI is a technology which could be used to improve profitability for some companies. Suggest companies based solely on AI will follow the same path as those 2 decades ago, which were BASCD on the internet, i.e., they crashed. If your objective is to maximize value of your portfolio, suggest you. This is clickbait nonsense. Viadu had. Next news. It's Disney earnings day. Here's what to expect. Barron's.com. Walt Disney shares have been left out of this year's rally, with the stock down 3% since the end of December. The company has been hurt by the combined effects of weaker results at ESPN, softer growth in the St. Reaming sector, and the continued erosion of linear TV viewing. CEO Robert Iger is under pressure to make big moves. Below are your comments. How much money was lost with the 6 movies that bombed this year at the box office? Not one top 10 movies with all the money spent. The boycott of Disney is hurting them. Walt Disney shares have been left out of this year's rally, with the stock down 3% since the end of December. Well, that's all I need to see from Barron's. Only people making money on Disney are those shorting their stock. Watch for expensive, woke marvels to bomb as yet more proof of this. Please subscribe to my channel. And if you like it, please thumbs up.